Hi everyone, back again to me, and in this video I would like to read some article again. And before I start, don't forget to like, comment, subscribe and share. Okay, this article by Peter Nurse. Investing.com. The US dollar claimed to fresh hike Monday, with Federal Reserve policymakers retaining a hawkish stance over monetary policy ahead of the central bank key Jackson Hole symposium later this week. At 2,555 ET, the dollar index, which tracks the greenback against a basket of six other currencies, traded 0.1% higher to 108.160 after climbing earlier Monday as high as 108 for the first time since July 15. The index gained over 2% last week, its best weekly rally since April 2020, boosted by a series of Fed visuals stressing that more hefty interest rate hikes are needed to combat inflation soaring at 40 years high. The US Central Bank has raised interest rates by 225 basis points since March, but all eyes will be on Chairman Jay Powell's speech in Jackson Hole, Wyoming on Friday for possible answer about how high US interest rates may go and how long they will need to stay at elevated levels to bring inflation back under control. Ahead of that, EUR or USD fell 0.1% to 1 to 1, falling to a new 5-week low after Russian energy giant Gazprom announced a 3-day halt to European gas supplies via the Nord Stream 1 pipeline at the end of this month, likely exacerbating the region's energy crisis. The European Central Bank is expected to hike interest rates again in September after surprising the market with a 50 basis point increase last month. ECB board member Isabel Scannable said in an interview late last week that she waiver another large interest rate increase next month as the region inflation outlook hasn't improved. It also seems that the European Central Bank doesn't have a problem with the weaker euro, judging by Isabel Scannable interview, said analyst at ING in a note. But to drive your or USD higher, the most relevant euro pair in an energy crisis, the ECB is going to have to turn a lot more hawkish than is thought of, with a recession around the corner. USD Aussie NY rose 0.1% to 6, with the pair climbing to its highest in nearly 2 years after China's central bank cut key lending rates again, attempting to prop up an economy reeling from COVID-19 clampdowns and a property crisis. GBP or USD edged lower to 1, not far from Friday's 5-week low of 1, with consumer confidence in the UK having fallen to a record low as concerns about a resilient increase and inflation squeeze household finance. The Bank of England is expected to continue tightening monetary policy with another interest rate hike of 50 basis points in September, but this week unlikely to provide much support for the beleaguered pound after the Bank of England warned that the country's economy would likely enter a prolonged recession in the fourth quarter. USD or GPY rose 0.1% to 133.37, with the yen hurt by a spike in treasury yields ahead of the Jackson Hole Symposium, putting the closely watched 140 level back in play, while the rate sensitive out of USD rose 0.4% to 0, helped by the Chinese rate cut. Okay, that's all from me. um, don't forget to like, comment, subscribe, and share. See you in the next video.